All right, we're live. Sweet. As always, for those watching the replay, skip 5 minutes ahead. We always give everybody grace periods. I may change that in the future. We'll see. All right, let's let the world, or remind the world anyway. All right. For those who are in here, let me know if you can hear me and if you can see me. And if you can, we'll start in 4 minutes. Sweet. How are you, Isaiah? You know what I was thinking today? I was like, you came across my mind because my buddy lives in Alaska, and I'm like, why Alaska? I'm like, why do people live there? I personally hate the cold, so cold aside, like, why Alaska? Did you grow up there? Did you move there? I guess if it's for work, that would make sense too. For those who are coming in, let me know if you can hear me. Give me a yes in the chat. Give a little thumbs up, like button to the video. Not cold? Sir, you must be of a different breed. The weather gets down to like 50 and I'm already not loving it. And well, 50 is like a sweet spot. Anything under 50, I'm like, I'm good. I'll pass. Gotcha. That makes sense. I grew up in the Caribbean, so I'm naturally warm-blooded. For those who are in here, remember to hit the little thumbs up or like button. I always require at least 50% of engagement for the free classes that I have. All you got to do, hit the little thumbs up, the little like button, and we'll be good to go. If you're not on YouTube directly, you may need to click on YouTube to open up YouTube directly to be able to see the little thumbs up or like button. 70s, that makes sense. From LA too. I went to, was it San Francisco? No, San Diego. That place was cool. I went to visit my brother when he was stationed out there. Hey, welcome, Connie. Kev, welcome. We'll start in a minute and 15 seconds. Remember, hit the little thumbs up button, the little like button. That's your only job, and to listen and to ask questions. You're in Chicago, Kev? Shout out to you. I was in, when I quit my job 2 years ago, I went up to Michigan to help this community out. And it was north, was it north? Yeah, it was north of Chicago. I think maybe like 3 or 4 hours north. And right before I left, literally the day that I left that community, it snowed. Like I think like a foot or two. Perfect timing on my part. I heard it got bad when I left. Actually, no, a week before I was leaving, it was snowing. That's what it was. And then it cleared up when I was leaving. I don't miss that. Smart man. All right, let's start. Welcome, everybody. My name is Advent, and I am not a financial advisor. Anything we go over in today's class or any of my content is not financial advice. It is only for educational purposes only. Please do your research before you engage in trading because it can be very risky and you can lose a lot of money if you don't know what you're doing. So, for those who might be new here or new to watching this series, the Let's Learn series is essentially where the other groups that I support, this is their version of the free group coaching. So you guys can literally ask me anything trading related, anything you need help with, whatever you're struggling with, and I'll give you my feedback and insight on what may help. And with that being said, let me start off with the questions and then I'll open up the floor to you guys to ask me stuff. Also, we got 9 people in here and we got 4 likes. Gonna have to get those likes up. Let's see, what would you like to go over? All right, so somebody mentioned chart setup, best indicators starting out, and support and resistance. Let's bring up my chart. And whoever asked that question, hopefully you are here because when you say something vague like setting up a chart, it's like, all right, are you using Webull? Are you using TradingView? Are you using Thinkorswim? What exactly are you using? Because I can show you how to set up a chart. I use Thinkorswim and I use TradingView and I used to use Webull. I'm not going to go over all 3. So if you are in here, please be a little more specific. In the sense of indicators, if you are new, 0 indicators. Don't use any indicators. When you're new to trading, you want to focus on establishing, really being able to read the charts without any indicators and understanding price action. If you are not familiar with price action, you can study up the strat. I have a playlist on that on my channel. It's pretty much price action simplified. It tells you exactly what to do, what not to do, and when to do nothing. And you don't need any indicators. Now, after you learn the strat or price action, then you can add other things if you want to. But if you are new, you don't want to add any other fancy gizmos because again, it's going to stunt your growth being able to read technical analysis, in my opinion. Support and resistance, that is an easy one. Oh, we got some nice examples here too. All right, so support and resistance, keeping it pretty simple, it's a specific level or area that either gets rejected or that price bounces off of, right? So let's say, for example, here, and you guys can see my screen, right? Before I continue. I'm going to imagine you guys can. So support and resistance, like I mentioned, is just a level where price is getting rejected from or bouncing from. Now, it's not going to be exact to the penny, but it's going to be, give or take in that area, right? So looking at YM on the 15-minute, we can see, and support and resistance, I would categorize as a place where price rejected at least more than 2 times. So for example, we have right here, we have every time IWM came down to this level right here, it kept on bouncing off of that level. And here we had 2 rejections. So 1 rejection, 2nd rejection, didn't reject off it perfectly, but we'll accept it. So this area up here, Actually, let's make this cleaner. This would be resistance because price is resisting that level. It's not breaking through. And to keep things quite simple, down here, we have the opposite. We have support. And as the name will suggest, this level is supporting the price. So it's failing to break below that level. And generally, when we bounce off a level, we tend to reverse back up to retest resistance. And we'll kind of do that back and forth until one of them are broken. So in this case, we can see how when price came back to resistance, it came back down. Instead of bouncing off of support, it broke through that level, as we can see here. So it broke through support. And one thing to notice is you'll hear this term, old resistance becomes new support, or old support becomes new resistance. Did I say that backwards? Let me write it down. It's easier for me that way. So old resistance becomes new support, and old support becomes new resistance. Now, what does this mean? To show you guys a cleaner example, let's just get these imaginary fake lines. And let's say we have resistance up here and support down there. So similar to the example below, we have a push up, push down, and they'll kind of just keep on doing that until eventually it breaks, right? So here we had this support level that broke. And then when price comes back to hit that level, it's now resistance because the sellers have this area in control. So what price may do is it might come back up and then just continue going down until it finds support somewhere else. And the same thing for resistance. It'll keep on coming back and forth until they decide that they want to break through. Then it'll come down, test this level, and then keep on heading back higher. For example, right over here, we finally broke through this resistance level. Let's get rid of these lines to make it easier for you guys. So we broke this level right here, as we can see. It kept on bouncing off that level, and then it went higher. So old resistance became the new support level because now the buyers are in control of that level. Making sense? Questions? Are we clear? Support and resistance? Yes, no, confusing? Cool. For those who trade the strat, our support and resistance are broader informations. All right, let's see. Somebody wanted to go over reversals. If you are in here, if you can be more specific, because reversals doesn't really tell me anything. That's a little vague, and I can talk a lot about reversals. So if you are in here, please let me know specifically what you mean, because that's a little vague. So what exactly about reversals, Darlene? And what's the context? You get confused with that and a pullback? So giving you a quick example on the left side over here. Let's say we have, let's just use this for now. Let's say it's a trend day. Actually, let's go down here. I like to determine a reversal versus a pullback and how deep the pullback is. So using the TTO model as a base, for those who know about that, we have a clear uptrend making higher highs and lower lows, right? And then it continues doing that until eventually the market structure breaks. So now it's making lower lows and lower highs, so on and so forth, right? So if we're looking at a trend, to me, this will just be a pullback because the market structure has not changed. If we're looking at a reversal, to me, market structure has changed. Instead of making higher highs and lower lows, now it's making lower highs and lower lows, and so on and so forth, and it'll continue from there. This tool is weird. So let's delete all this old stuff real quick. So let's look at this 15-minute candle, for example. Generally, so we have a TTO right here, higher high, lower low, higher high, then it reversed on that 3 candle, but still made a higher high and a lower low. Sir, I want to activate that drawing. So it made a higher high, lower low, higher high, lower low, higher high, then a lower low. So now the market structure is breaking a little bit. We come back up, a higher high, a lower high into another lower low, and then a lower high into a lower low. So to me, this is what I would consider a reversal as opposed to a pullback, because a pullback to me is just a pullback before it continues in the direction. As we can see here, we broke structure from this lower low, this higher low to a lower low. And instead of continuing higher, which it should have, if it was going to be just a pullback, price reversed and it started trending down. Does that make sense? Depending the time frame that you're on, Kev, it can be looked at chop. This is the 15-minute time frame, so this like back and forth is kind of like the 1 hour probably inside bar during that time. So you can look at that as chop if you want to, at least looking at the candles like this, right? But in the overall scheme, it would be a reversal. Does that make sense? It's still confusing. Cool. Remember, don't try to overcomplicate things. Just keep it simple. With the TTO, that's just a pullback in the direction of the trend. A reversal doesn't continue in the trend. It reverses back down. Again, just keep it as simple as you can. Don't try to overcomplicate it. Can a pullback only be one candle? It definitely can. For example, let's look at this over here. This is on the 15-minute time frame. You can consider this a pullback when it went 2 up and then 2 down, then it went 3 up. That's a small little pullback, right? Or there was an example the other day of a TTO, it might have been on Friday, with a 1 candle pullback. Let's check the 5-minute. Yep, so right here, right? We have the push up. It pushes down, a small little pullback when it reverses down, and then it reverses back up. I would consider that a one candle pullback, right? And let's say we look at this TCO over here. We have one candle that pulls back on the reversal, then a continuation, then a reversal back up. So you can see this as a two candle pullback, right? I prefer ones that have two or three candles pulling back. The one pullbacks for me, I'm not 100% comfortable with those. So I usually ignore those or avoid them or avoid taking them rather. But you're more than welcome to take them. I just prefer TTOs like this or like this. Pullbacks and reversals. Everyone on the same page before I continue? Sweet. All right, let's see. Somebody wanted to go over risk management and technical analysis. So whoever is in here that asked about risk management, what specifically do you want to go over regarding risk in the sense of, are you oversizing? Are you like, what's the exact question about risk management? Is it sizing? Is it how to properly size? Like, what's the exact question for whoever asked that if you're in here? Mr. or Mrs. Risk Management, if you can please come to the podium. All right. Looks like they're not here. We'll continue. Remember, if you ask a question, I would prefer that you attend because, you know, I specifically state to be as specific as you can in the questions that you want to go over, because moments like this, when you just say risk management or technical analysis, there are so many components that I can dive into on both factors or both things that were asked that it'll just be too long for the session. So if you can, for the next time, if you do watch this recording, please be more specific. Is it oversizing? Is it how to size? Things like that, right? Kev, we'll definitely have time to go over that. Let's see. Somebody mentioned they are struggling with understanding what the chart is giving them and what it is they are looking for. I would hope that whoever asked that is in here. And if you are in here, let me know. And what specifically are you, I would say, what are you not understanding? And then we'll start there. Because again, this specific struggle, I can attack it in many different angles, just trying to see exactly where you're at so I can, speak on it properly. So the struggle was understanding what the chart is giving me, what it is I'm looking for or at. So if you are in here, please enlighten me a little more on that so I can better answer that question. All right, let's move on. Doesn't look like they're here. Somebody had struggled or is struggling with pulling the trigger. Now, hopefully you're in here too, because I can answer that in two different ways. So if you're having trouble pulling the trigger, is it in the sense of like what exactly is holding you back? Or what do you think is holding you back from pulling the trigger? Confirmation? Uh, confirmation in what sense? Like for the setup? And a follow-up question to that, do you have your setups clearly outlined in the sense of this specific setup, it's good if it does this, then I'm going to do that. If it doesn't do this, then I'm not going to do that. Like, do you have your setups like clearly defined on what they look like and what you need to do when they present themselves? So when it comes to pulling the trigger, then I'll ask you the this next question. What is your confirmation in the sense of, let's say for the sake of the conversation, let's say I'm looking at the 4 hour for the strat, or this is the 1 hour on the strat. My confirmation for the strat is very, very simple. If it breaks above this level, I'm going long. If it breaks below this level, I'm going short. That's my confirmation. Easy. Of course, I'll be more in line with taking the long because the time frames or time continuity is mainly bullish, as we can see here. So I would be more enticed to take the long side as opposed to the short side. So in your case, what exactly is the issue? Your entries, are they strat entries or are they entries of something else? So if it's the strat, I'm a little confused on the confirmation. Because if you're looking to go long, then you just go in long when it triggers long, or you go short when it triggers short. I'm having a little trouble understanding what the problem is. Gotcha. So what specific what specific time frames are you charting out these trades? So when you're looking at this trade, what time frame are you charting it out on? Is it the 4 hour? Is it the 1 hour? Is it the 30 minute? What is it? So if it's on the 4 hour, when you see a pullback, what time frame are you on? And when, let's say for the sake of the conversation, let's pretend this is a 4 hour candle and it opens inside bar While the 4-hour candle is inside, are you looking at the 5 and 15-minute time frame? Or are you still just looking at the 4-hour? So yes, that you're only looking at the 4-hour? Gotcha. So if it's inside bar on the 4-hour and it has not triggered long or bullish, you have no business looking at the 5 and 15-minute time frame. Because if the 4-hour triggers bullish, I'm going long. The 4-hour is now green. I'm in that trade. There's zero reason to look at the lower time frame when you're getting in on a higher time frame. In the sense of, if I'm looking at the 4-hour and this triggers long tomorrow, why am I looking at the 5-minute when it triggered me in on the 4-hour? The only time you should be using the 5 and 15-minute is when you're looking for a TTO if you missed the 4-hour entry. So what it sounds like after all these questions, I wanted to be very clear on what was going on, is you're having analysis paralysis. You're looking at way too many things and it's confusing you and giving yourself some doubt. Because if I'm on the 4-hour and this triggers long tomorrow, I don't need to look at anything under the 4-hour because I'm not looking at any setups on the 5 or 15-minute because I'm in a setup based on the 4-hour. If I'm taking a trade on the weekly time frame as a swing trade, it wouldn't make sense for me to be on the 15-minute because this is a swing trade off a weekly time frame. And when you're on a lower time frame, you're going to get all this noise. It's back and forth, back and forth, back and forth. But if you look in the weekly, we're just straight green. So if you're charting on the 4-hour and you're getting in on the 4-hour, you have no business looking at the lower time frame unless you're looking for a setup on the lower time frame. For example, when I'm trading options and I'm trading your favorite ticker Tesla, Brian and as above, so below, I'll answer your questions in a bit when I'm done with this. If I'm looking at Tesla or when I'm trading Tesla, if tomorrow opens up as an inside bar and it triggers 312 up, I'm going to go in long based on the 4-hour. I'm not going to switch to the 5-minute because I'm not looking at a setup on the 5-minute. Does that make sense? Cool. So if the 4-hour opens up as an inside bar, take the trade off the 4-hour. Don't look at anything else because you don't need to. Just wait until your targets or your stop losses hit, and that's it. Somebody that I work with had the same issue. They would get in on the daily, but they'll be on the 3-minute. They were like, oh my God, the 3-minute is reversing. It's doing all of these things. I'm like, bro, you got in on the daily time frame. Why are you looking at the 3-minute? You have no business on the 3-minute looking when you're taking the trade off the daily. Just wait. Because this is going to get you too emotional with all this noise. So if you're taking a trade off the 4-hour, get on the 4-hour or stay on the 4-hour. If it gaps up or down and you missed that 4-hour entry, then go on the 5 or 15-minute looking for a TTO. And when it comes to the TTO, remember, if the daily, the 4-hour, and the 1-hour triggered in your direction, all you're doing is taking a reversal trade back into that time frame continuity. So on Friday, let's say, for example, we had the 4-hour, the daily, and the 1-hour are clearly bullish because we gapped up. I missed the 4-hour entry, so now all I need to do is wait for the reversal back into bullish continuity, which was right here on this candle on the 5-minute. Again, don't make it overcomplicated and don't think too much into it so you don't confuse yourself. Hopefully that helped. And send me your trades tomorrow. All right. Uh, Kev, you said you wanted to go over examples of what to do when there's a gap up or down. Yep, keep it simple or super simple if you want to be nice. So, just to be clear, Kev, do you want me to go over TTOs? Because TTOs is what we do when there's a gap up or down. And I know you said yes already, but just to confirm, do you want me to go over TTOs? You might have to hit me with a second yes to confirm. Also, for those who just attended and didn't and came in a little late, ask me any questions you want, and I'll help you out in your trading, whether it's strategy, trading psychology, all that good stuff. Just put it in the chat, whatever questions you want me to answer. All right, so for the TTOs, again, if there's a gap up, I'm going on the 5 or 15-minute time frame, and I'm looking for a TTO. TTOs are just pullbacks or corrective activity before it continues in the direction of the trend. So gap up, even if there isn't a gap up, you can still look for TTOs. So let's say there's a gap up in this context. I'm waiting for the pullback, and then I'm taking the first reversal back into the trend to take me higher. And then the bearish TTO, you can look at as H pattern to continue down. So here we have one TTO on the 5-minute. This is the first one. We get the push up, we get the pullback, and we get the reversal back into bullish continuity, into the bullish trend. Entry is as soon as the candle, it's like a regular strat entry. We're getting in there. My stop loss is usually under the right side of the TTO if it's bullish, or the top right of the bearish TTO. So entry as soon as this candle reverses back up. So we're getting in as soon as this candle's high breaks to the bullish side. Stop loss for me is going to be on the under the TTO, like under the right side of the TTO. So if I'm looking at this as an example, I'll do something like this. Let's say the candle gets me in over here. My stop loss would be here, and you would be targeting the TTO to be completed. But of course, you can take profit as it goes in your favor. So with this example here, similarly over here, we get the push up, the push down, we take the reversal back up. Stop loss is under the lowest low on the right side of the TTO. Your max target can be the high of the TTO, and you leave runners in case it keeps on going higher. You can put the stop loss under the trigger candle like this, but for TTOs, I like to give it room. So you can see if that works for you. You remember, if the stop loss is too wide, dollar amount, like if you're using minis for futures, you might need to use micros to give yourself more room, but still get a similar dollar loss or gain. So that's one example. Another example that you could have taken, we have a second TTO right here. We get the push up, the pull back, we take the reversal back up. The max target is going to be the high, and you can leave runners if it continues going higher. If it's a valid TTO, it is going to break that high and make a new high of day. Generally, I prefer to take profit as it goes in my favor. I'm not really going to hold until my whole position until it breaks the high, just in case it doesn't. And then a third TTO that we have this 2 down, then we have this 3 up reversal. Like this. These are all on the 5-minute. This is 1, 2, 3. On the 15-minute, we have one right here. We get to push up, the pullback off a double inside bar. And then we're aiming for high of day, like that. Does that make sense on how to spot the TTOs and when to get in, and when we put our stop loss or take profits, things like that? Sweet. Remember, if you are new to it, paper trade with it until you get comfortable, and then go into your live account. Cool. All right, let's see. So as above, so below said, so do you enter on the third candlestick? If you are still in here, let's go back to that example. When you say the third candlestick, what do you mean exactly? If I'm looking at this 1, 2, do you mean the third candle that's about to print, like here? Because with the strat, we're just getting in on the next candle. So if right now we're a 2-bar, whenever the next bar opens tomorrow, I'm either going to take the 2 up or the 2 down, assuming it opens up as an inside bar. I'm not going to wait until this next candle closes and then take the next one. That's a whole different setup at that point. What is the maximum trade based on your account size? What percentage do you use on a trade? What do you mean exactly? What percentage do I use on what? Like what percent of my account do I use in a trade? All good. Are you asking what percent of my account I use in a trade? So I'm clear to answer you properly. Gotcha. So let's bring this up so we can all see it together. I had a risk management class. So I'll go over it briefly, but I would highly recommend that if for those who have not seen it yet, just so you know where to find the full video, when you go to the YouTube channel, go to playlists, go to the psychology of trading and system creation, go to that playlist. And if you go to risk management, I go in extreme detail on risk management. But for now, I'll give you the cliff notes. Let me just bring this up real quick. So when it comes to sizing, that's really up to you and what you're comfortable with. So when I'm trading options, these are the categories that I've come up with in the sense of what type of trader somebody may be. So if you use 15 to 20% of your account, I would consider you an aggressive trader. If you use 7 to 10%, you're more of a moderately aggressive. This is where I fall into. So me personally, this is how much I use in my account per trade, 7 to 10%. If you're a little more conservative, or you may have a really big account, you may want to consider being a conservative trader. Again, this is all in relation to what you're comfortable with. Using 15 to 20%, to me, this is too aggressive. I'm not comfortable with that, but I'm comfortable with this. And I've had some students that have really big accounts that this is their sweet spot, 2 to 5% per trade on an account, or per trade rather, for their account. So with these different categories, you can see which one works best for you and then work on that. As always, pay per trade using these different tiers or categories and see which one works best for you. For me, when I'm trading options, my max loss is 30%. Unless I'm trading zero DTEs like on Friday for Tesla, I'll be more conservative where I'll use 5% of my account on the trade. And I might use I might up it to 40 or 50% loss, because my max loss on the trade can be a little higher because I'm using less of my account. So the trade, if it goes against me, it's going to lose a similar amount. So if I use 10% and I lose 30% of the trade, that's 3% of my account that's gone on that trade. If I use 5% of my account and I lose 50%, that's 2.5% of my account that I lost on that trade. So that's how I kind of make it make sense in my head in what I'm okay with. Anything that would lose my more than 3% of my account in a trade, I'm not okay with taking. So this is what works for me. Find out what works for you. And this is just a little blueprint that you can use. Cool. Did that make sense? Hey, no problem. My pleasure. So, Brian, if you're still in here, you asked, apart from utilizing the strat, do you also check news on certain stock? If so, then where do you get your news from? I noticed something was happening last week on Tuesday where QQQ and SPY dropped. Great question, Brian. If you're in a group that I support, or my group, or if you don't know me from any group, actually, Brian, if you're still in here, where do you know me from? And as you're answering that, I'll answer your question. So you can use Forex Factory. I use Forex Factory. Whatever news events say USD, that's what I always put in my watch list. So if you guys are like, oh my God, what happened? The SPY just dropped or SPY just pumped and my position got blown out. Probably news dropped and you weren't paying attention. I always give you guys the news. So always pay attention to the watch list if you don't go to the websites yourself. So I use Forex Factory, and you can also use Market Watch. I use both of them because sometimes something that's on here may not be on Forex Factory and vice versa. For example, on Forex Factory, on Wednesdays and Thursdays, it's going to show me crude oil inventories. And then Thursday is natural gas storage. So for people who trade oil or natural gas, this is very important information for them, because if they're in a position and that thing spikes in the opposite direction, you're gonna have a bad day. I'll tell you that. So you always want to see what news events are happening so you can be informed, because you don't want to get caught with your pants down. People who don't know what FOMC is, I always enjoy watching beginners learn this lesson. They'll be in a position at like 150, 2 p.m. hits, and they get blown out their position. They're like, oh my God, what happened? It's like, well, FOMC happened. And when Jerome Powell was talking, I'm good. I don't trade that at all. So hopefully that answered your question. For those who just came in and you're new to this series or this class, you can ask me whatever you want, whatever you're struggling with in trading, whatever you want to go over, and we'll go over it and I'll give you insight into it. Oh, cool. Glad you found me, Brian, and glad that you're here. This specific class we have every third Sunday of the month, either at 7 or at 8 p.m., depending what people vote on. I tend to do it at 7 p.m. now because last time a lot of people joined and they asked me a bunch of questions and we went overtime. We'll probably go overtime today too. So These will probably go on for like an hour to 2 hours. Today we'll probably go over an hour, which is fine. So glad for you to be here and glad you found me. Any other questions that you had? Any struggles that you're struggling with in your trading? And when you're answering that, Louis's question or Kev's question, well, Louis V in the chat for those who don't know his actual name. When should I use the fib tool? That is a great question, Kev. It really depends. Why do you want to use the fib tool? And you don't need to use the fib tool. If there's a gap up or down, I don't use the fib tool in that context, so I can't necessarily give insight. If I am going to use it, it's going to be for like for Tesla, I use my fib tool to get extra targets. So when you guys look at my watch list, these extra targets are based off of fibs. These specific fibs, the way that I have plotted there, I can't show you my exact levels because it's proprietary and I'm sworn to secrecy by an NDA by one of my mentors. But what I will show you an example on what you can do. Let's say for the sake of the conversation, I'm looking for targets besides the strat targets, right? So I want to get the lowest point before it reversed back up and the highest point before it reversed back down. So let's say I start from this level here, and then I can connect it to this level there. This is the lowest point before it reversed back up, and this was the highest point before it reversed back down. So now, if I get this 2 down reversal, I have a strat target right here, but I also have fib targets as well as the strat targets. So if there's a big gap between targets, like strat targets, I would draw a fib and get targets in between those levels. Because if I take this trade like this to the downside, let's say, and the first target is down here, strat-wise, or the body, that's 182 points. I'm not going to let 182 points reverse and go red on me. So I'm going to take profit as it goes in my favor. So in this case, oh, whoops, wrong place to draw the fib from. So in this case, I get this low, I get this high. So now I have more targets as it goes to my max target for the strat. So I have one target there, this fib level, that fib level, this strat target, this fib level, that strat target, so on and so forth. So that's how I use it if I want to get extra targets. If there's a gap, I don't really use it for gaps personally, so I can't really give you insight there. Have you tried trading ES or YM during a different session, say Asia or London? That is a negative, kind of, Isaiah. I did maybe like a year and change ago. I tried trading it like in the afternoon, like 7 to 10 p.m. Eastern. But what I found is that it took away from my relax time. And I like to relax and not be zoned in all the time or locked in all the time. So for me, and London, at least for me personally, since I'm on the East Coast, I'm not going to wake up at 3 in the morning to trade. It's going to mess me up for the New York session. So I personally don't. I know some traders, based on their schedule, that they trade in London or Asia. I don't find it. Um, Let me not say that I don't find it effective because I haven't traded it enough to collect data to say if it's effective or not. It definitely is effective by what I've seen other people mention and what I've seen other people and their results. Just for me personally, and the way I trade and the way I have my schedule and day structured, it's not viable for me. I think since you're 5 hours behind, I think 5 hours behind. London starts at like 11 your time or 10 your time, something like that, if I'm not mistaken. So it really depends on your schedule. Some people like it, some people don't. Whatever works, whatever gets the money at the end of the day. And I also prefer the volatility and the volume during the New York session because London and New York are open at the same time. So we get a lot of volume. Asia tends to be pretty slow, which I don't like because I don't want to just sit there all day. But yeah. Oh, 4 hours? Oh, not bad. So that it'll be 11 your time for London. I think London opens at 3 a.m. if I recall correctly. Yeah, I've been studying strat and already set up my charts on interested stocks. Currently just doing paper trading and it's been pretty decent. Hey, Brian, great to hear. Definitely stick with it. Journal and collect as much data as you can so you can see which setups and timeframes works best for you and go from there. Stuff mentioned, when you say gap in the fib scenario, do you mean gap at start of day or a gap in between any time? Specifically in the New York session. So if I'm looking here in the New York session, and I like to use gaps with the 4 hour because generally the daily would have a gap sometimes, but I'm usually referencing the 4 hour. So this will be the 4 hour level that the candle hit from Thursday. This is Friday. So we can see there's a gap. There's a gap right here that hasn't been filled, right? And some days you'll get really big gaps. Like there's a clear gap right here that we have. There's another big gap right here. There's another one there. And remember, you need to have regular trading hours on. If not, you're not going to see the gap. So gap there, gap there, gap there, gap there, gap there. There was a gap here, but it got filled by that wick. So that's what I mean about the gaps. Yeah, I remember we were talking about that the other day, Isaiah. It's like platinum looks to move a lot during the other times, like Asia or London. It doesn't really move that much during New York session, from what I saw when we were going over it the other day. And that's a question you can ask yourself. Is my schedule worth it? Is it worth my schedule to trade platinum during those times? Or does it work better for my schedule to just trade the New York session and trade something else? All right. More questions. For whoever is in here and have not done it yet, please hit the like button or the thumbs up button so the algorithm could see that people like this type of content so it can push it out. First time watching you, do these videos get saved to your channel? Yes. So stuff, did you join this live through YouTube or did you join this live through something that I posted somewhere else? Divine, gotcha. So the same link that you use to join this is the same link for the recording. Something else to note, all the live classes that I have like this, if on the YouTube channel, let's go back to the channel. So on the YouTube channel, if you go to the live tab, all the live classes I've ever had on YouTube are here. Now, I keep it a little more organized. So specifically for the Let's Learn series, I have right here, Let's Learn with Advent. In that playlist has all the Let's Learn classes that I've had. So if there's any ones that you've missed or that you want to go over, you can, there's pretty much all of these. And once we finish up here, it's going to post in this section here since I have it categorized. So if you want to find it really easily, you can just go in here, or you can just go to the live tab on the channel and just find all of them there. Reminder that on Tuesday at 9:15 a.m. Eastern, we'll be live trading. So if you haven't done it yet, you can go to the live section, hit notify me so you can be reminded, and it'll notify you when we start. It's going to be this Tuesday at 9:15 a.m. Eastern time. So definitely join in. And any other content that I have, I try to keep it as organized as I can in the other playlists. So everything is there for you guys. Of course. All right. What other questions do you guys have? Put it in the chat. Any other questions? Put it in the chat. And remember, any question is fine. There's no judgment. If you're struggling in your trading, if there's something specifically that you are confused about, that you want me to clear it up for you, let me know. And there's no such thing as a stupid question in this business. Remember that, because that stupid question that you think is stupid can be the aha moment for you. So I do options. How do I pick tickers? That's a great question, Darlene. Based on your journaling, where does most of your money come from? And as you answer that question, do you want to be somebody who trades different tickers every other day? Or do you want to just stick to one or two tickers and master them? While your answer. So picking tickers, that's really up to you and how you want to do it. You can always just scan for different setups that you like. So let's say we want to look for an inside bar scan on the daily time frame. We can just hit the scan. And now we have all these tickers to choose from. So you can do that. And then you can see which ones might have time frame continuity, which ones might not, so on and so forth. Let's say if you want to find a 3-1 setup on the weekly or the 4-hour and you want to take that trade, you can just scan and then look for whatever ticker comes up and do that. This is the scanner. I think it's in 100K's group as well, but if you go into our group or my group and you go to Strat Scanner and you go to, where's the Thinkorswim one? Oh, I guess I have to update it for the Thinkorswim. Whoops. It might be in, where did I put this? It might be in here. I literally have like an entire, oh, it's in the ebooks and scripts. That's where it is. So in the ebooks and scripts, you're gonna, right here, the Strat Scanner. Oh, you're on TradingView. So in that case, just go to the Strat Scanner, click on this link where it says Cerulean Strat Scanner, add this to your TradingView, and then you can use that indicator instead. So with the Cerulean Strat Scanner, once you bring it up, sometimes you may need to remove it and re-add it. Haven't figured out how to fix that issue yet. So it's going to pop up on your chart. You're going to go to settings, and then you're just going to type in whatever you want to look for, whatever tickers you want. So let's say if I want to also see Tesla. And let's say I also want to look at NVIDIA at the same time. Yeah, and this one you have to add the tickers. If you want to scan for tickers, you may want to use this sheet. I think the guy updates it every day. You can look into that. RunStrat, I think they stopped using, or they stopped working. Let's see if it works. Oh, cool. So RunStrat is back up, thankfully, so you can use that as well. And you can pretty much put in whatever you want. So if you're looking for specific patterns, let's filter this. And now we have 2-1 setups for these specific tickers. I think this is the daily time frame. And you can look at it through the stop, the daily time frame. And then you can look at it for a range. So if you only want to look for 2-1 setups between stocks, value between 220 and $50, hit filter, and now I have these two options. So you can expand them to pretty much whatever it is that you're looking for, whatever criteria that you want. FTFC, if you want that. So we have bullish FTFC for these three tickers. So NVIDIA has a 2-1 on the daily. And for those who are in my group, or you purchase this from where my buddy has it, if you're in my group, it's free. It comes, of course, with the membership. So the way this scanner works, whatever time frame you're on, it scans all the tickers that you have set, and whatever's lit up in green is what is currently being shown, or whatever is currently active. So we have YM here. We have a 2-1 setup. It's lit up on the scanner. 2-1 is lit up. So NVIDIA from RunStrat, we have a 2-1 setup here. Something to note, my eyes are going to be on NVIDIA tomorrow because we have a TTO setup right over here. Just got to wait until it breaks bullish. Hopefully it does break bullish because that would be really nice. But yeah, RunStrat, you can definitely use that to scan and see what tickers you come up with and go from there. Isaiah mentioned, since no one asked, once you get triggered in on the 4-hour, how do you manage it? Are you using the 5-minute or 15-minute to trail your stops? That is a negative. My 4-hour trades are 4-hour trades in and of themselves. So as we discussed before, I have my ATM setting set up for that specific trade on that specific time frame. Once I get in, the ATM setting automatically manages the trade for me. I don't need to do anything for the 4-hour trade because I configured the ATM setting automatically, or to automate the trade for me once it gets me in. So I don't do anything anymore. I have it take me out. So the ATM is split up into 2 sets. 5 contracts for one half of MYM and another 5 contracts for the second set. The first set takes me out at 50 points. Second set will take me out at 100 points, or the auto trail, whichever one hits first. And the stop loss is 50 points. And then the auto trail is set to trail my position every 15 points. It goes in my favor. So I don't touch the trade as soon as I get in it. It automates itself. In Thinkorswim, of course, you can't make it as what's the word? You can't make it as complex as Tradeovate, unfortunately. I did reach out to them and they said they'll consider adding that in the future. So hopefully they do that. But yeah, once I get on the 4-hour trigger, the ATM just automates the trade for me. Do you stay in the trade on the time frame you got in? So if you got in on the 30-minute, do you give the 30-minute time to play out? Absolutely, because I got in on the 30-minute. If I got in on the 30-minute, I'm expecting that trade to take at least 30 minutes or more to pan out. The same thing with the 4-hour. Granted, when we trigger the 4-hour, like for Tesla, for those who trade Tesla with me off the watch list levels, generally when Tesla breaks the 4-hour, we're hitting target in less than 10 minutes with the big movement that Tesla loves to do. So I usually expect it to take that long. Sometimes it can be even sooner. For example, let's say for the sake of the conversation, I took this 2 up right here. So this 2 down, 2 up reversal. Let's say my first target was this high right over here. We see that it took 45 minutes to hit. Actually, it looks like an hour. It looks like, like 45 minutes for that to hit. So 15 minutes or higher, it's going to take, that I have in my head, that it's going to take to hit these levels based on whatever my targets are. So what if your trigger was on the 4-hour, but you missed it and you got in on a TTO on the 5-minute? Well, in that case, I'm looking at the 5-minute now for the TTO. So let's say I get in for YM, I missed the 4-hour trigger, so now I'm looking at a TTO. So for the TTO, I'm going to get in as soon as it reverses back bullish. I'm going to take profit over here once it breaks that high. I'm going to leave a runner position because if it's a valid TTO, it's going to head higher. So in this case, I got in here, stop loss is down there. Before it reversed, it hit a peak of 131. Realistically, I'm going to be taking profit every 40 to 50 points. It goes in my favor after it hits this TTO level. So this is what, 51 points? With the slippage, let's say 50 points. So I'm going to take some profit at 50 points. And then every 40, 50 points after that, I'm going to take profit. So I hit 100 points. I'm going to trim my position. And then if I want to leave a runner, I'll leave the runner until the time frame reverses. So my runner would have been stopped out on this 3 down once price reversed against me. Does that make sense? Cool. All right. I'll take one more question and then we'll wrap up. Put it in the chat, please. One more question, and then we will wrap up. Also, question for you guys. Do you guys find these type of classes helpful when I have these free group coaching sessions and when I have the trade recap class every Friday? Cool. If there is something that you guys would like me to do that I have not done yet, what would it be? Like, what type of content would you like me to create or have for you guys? Hey, Pat, you've been quiet this whole time. Sweet. Cool. I'm glad all of it is helping. So, any more questions before we wrap up for the night and enjoy the rest of our Sunday? Gotcha. Cool. Well, doesn't look like any other questions. Before we wrap up, as always, what was everybody's biggest takeaway, or what's the biggest thing that you've learned today? Put it in the chat. Also, for those who are watching this or maybe watching the replay, if you can do me a favor, and if you do find any of this helpful, feel free to share the video with anybody you think can benefit from it. I would greatly appreciate that. I have to work to identify the TTO more. Yeah, definitely, Pat. You know, a lot of this you just have to really, this is screen time, right? The more time you spend looking at the chart, it's easier to spot, because I can spot TTOs like nothing now. But when I first started, it took me a while to really like spot them and to understand what they look like. So don't worry too much about it. You're still new to the TTO. Take your time, practice every day, maybe for 10 minutes a day. Like, all right, let me go on the 5-15 minutes, see if any TTOs printed. Speaking about TTOs, NVIDIA has, like I mentioned earlier, one setting up right here. We get the pull back. Let's see if we get the push up. Yeah, definitely the websites. Those are important. We remember, as I always tell everybody and all my students, you have to be prepared before you trade. If you are not prepared, then you cannot trade until you are. Because there's many mistakes that you can avoid by being prepared. Like somebody the other day, someone posted in the chat, "Oh man, I lost $500 because I forgot that there was news." You should know all the news that's going to come out when you're trading. That $500 mistake could have been avoided. Well, Darlene, I'm going to need you to soften up your head, because you know what you need to do? This is your homework, Darlene, for the week. I'm going to hold you accountable to this. I want you to return this back to me by Wednesday. I'm going to make a reminder. Remind me to check up on Darlene if she finished the exercise on Wednesday at 7 p.m. It has been added to my reminder. Wednesday, 7 p.m. You're going to hear from me if I don't hear from you first. So I'll give you guys a lovely practice that I like to give to students who are sometimes hard-headed, or they just need to really see things on paper. Let me just find it real quick, and I'll share it with you guys. There we go. Found it. All right. This is everybody's homework for this week. Pattern changing exercise. What are 5 to 10 reasons that you must change this bad pattern that you have? What is it costing you by not changing this pattern? And what are the great things that will happen once change occurs? And as my mentor told me and shared this with me, your life changes when you change your pattern. Because if you stick to the pattern of not fixing and working on your mistakes, nothing's ever going to change. So this is everybody's homework for this week. Darlene, 7 p.m. Wednesday. You can give me 3 to 5 reasons, and we'll go from there. Everybody else, do this exercise. You're welcome to send it to me if you would like. If you know me on Discord, or if you know me only on YouTube, you can email it to me at Cerulean Mind Academy. Because again, we want what we want, whatever your goals are, whatever the reason why you're trading. And if you don't change up what you're doing, you're not going to see any results or any change. You're going to keep on staying in the same loop, back and over and over and over and over and over and over. Other than that, before I start going off on a tangent, thank you guys for coming out. Thank you for watching. I will see you guys on the internet. I will see you guys on Tuesday. Remember, live trading, 9:15 a.m. Eastern on the YouTube channel. If you haven't already, go on the YouTube channel, go to the live section where it says live trading, hit notify me, and it'll remind you when we're starting on Tuesday. So I'll see you guys then. Those in the group that I support and my group, I'll see you guys there. And have a good night. Enjoy the rest of your Sunday. Get some rest for tomorrow. I'll see you guys.